With the highly anticipated release of the July jobs report, it was a big month for job growth in the U.S.
The numbers from the Labor Department were much higher than what analysts had projected. Economists were expecting to see 250,000 new jobs added in July. The actual number was more than double that, 270,000 jobs higher.
528,000 jobs were added even in a month when summer hiring traditionally slows down. Daniel Zhao joins us now. He's a senior economist at Glassdoor. Daniel, your reaction?
Well, this jobs report was really a summer blockbuster. We saw that the labor market, even though there was some anticipated cooling, we actually saw that jobs growth was much higher than expected. And I think that this report hit some really nice milestones. We saw that the unemployment rate was back to pre-pandemic levels. Payroll employment is back to pre-pandemic levels. So it really just goes to show how dramatic and quick the recovery has actually been.
I want to follow up on that point, Daniel, because the other huge news out of this report is that unemployment rate falling to 3.5%. That's only a drop of 0.1%, but analysts like you are really celebrating this as a return to pre-pandemic levels. Were you expecting that to come out of this jobs report? Tell us more about the significance of this.
Well, I think we were actually concerned that there would be more significant cooling because we saw earlier this week job openings that had actually come down a little bit, and we saw that we've seen broader economic indicators start to slow as well. So the fact that we are continuing to see job gains very healthy, the fact that unemployment is coming down is a very healthy sign that the labor market is a pillar of strength, even though the broader economy is slowing.
What sectors are we seeing that are having the most growth?
Well, I think what's really interesting about this report is we've actually seen jobs growth across a whole host of different industries. Really, almost every major industry added jobs in this last report. And perhaps the most surprising thing is that even though we've been hearing about slowdowns in retail, in tech, in finance, all of those industries actually added jobs in July. So a very healthy report overall.
Wow. Daniel, you and I were talking a little bit before this show about some of the conflicting messages that people are getting in our economy right now. These numbers, obviously, a reason for celebration, but stocks took a nosedive when the report came out. Explain to us why that is and how overall you see the health of our economy.
I think some of that might be a reaction to how analysts, or how the market really expects the Fed to respond to this report, because we did see that wage growth came in a little bit hotter than maybe the Fed had hoped for. We did see that the job market is just hotter overall. And so I think that there might be some anticipation that the Fed will continue to tighten monetary policy maybe more aggressively than we had originally anticipated.
Interesting. And as your thought overall about the health of our economy?
I would say that the labor market continues to show that we are not on the brink of a recession. The labor market is still a pillar of strength.
It's a good takeaway.
Yeah.
Daniel, thank you.
Thanks.